Welcome to 𝐄𝐓𝐇𝐄𝐑𝐄𝐋, where we talk about investing, finance, and professional development. It's the current time of 8:30 a.m. on the Eastern Time on September 27th on Tuesday. Ethereum currently $1,390, up about 4% so far. On the overall crypto market and the equity market, we are experiencing a rebound today after closing at the lowest level since 2020. And with respect to overall crypto market and the equity market at the moment right now, Dow Jones, S&P, Nasdaq are all up about 1.5%, while oil is levitating just below $80 at 77.68. While the 10-year yields is crazy high still at 3.2%, 3.821%, apologies, which is sky high, to be honest. We're closing in on 4%. And obviously, with respect to the sell-off that we've been experiencing the last couple of days, it's due to the fact that with respect to the inflationary pressure and the probability of us continue to be raising the rates going forward in the upcoming CPI report, the FOMC meeting, and more aggressive movements coming from the Feds going forward, shifting our economy onto recession. So that's something that a lot of investors are being a little bit more cautious of. And corporate companies, will have to also make the correlating adjustments going forward with the interest hikes. And that will mean, the job markets will be hindered subsequently, because, to keep their roof over their heads, they have to sometimes trim some of the fats around their company, right? From corporate expenditure front, from real estate to human capital front, which technically will be, translated to jobs. And with that being said, a reduction in the job numbers can also hinder because the Fed's mandate specifically, the original mandate was not to fight inflationary pressure, but is to help revive the job market in the U.S., right? So now if you are, trimming and, on top of the reductions and also the, the wave of the student loans initiative from Joe Biden as well, and with respect to the summer boom that we've already seen so far, it's only going to be a slowdown during fall all the way into winter. So the numbers might not look as rosy as we hope to be. So that's something we also have to be cautious about, right? So we see how that goes. And across the market, is today the rebound. What we're seeing in this morning is really more of a technical exercise. So let's just dive right into it. Respect to recording time of, again, at 8:34 a.m. on the Eastern Time on September 27th. Across the buying activities from the whales, if you take a look at our Patreon updates this morning, it's not the most active. It's just kind of stale, a trade on a sideways fashion. And the reason that we're reaching to a next level, take a look at technical at the moment right now, you could see that we're about to form a golden cross. And the reason we're bouncing is because we were hitting a resistance, right, at 35 out of 70, going up to the next level of 45 out of 70. And respect to the weekly right now, we're still bearish. We could see that we still need to cross down before we cross up. We still have these two double heads. We're about to form a third head, right, as we reach to 46 out of 70. So this is quite temporary. And I would say this bounce is not sustainable. And we will see lower levels coming. And then on a monthly, you could see that we are looking to plateau, but you could see that already we are looking for some sort of a normalization downwards from here. So it's not the best, right? So daily is still looking like decent, right? But we're going to get a blockade somewhere around 1450. So as we reach 1450, we're going to sell back down, which is very logical, right? This is more of just a technical exercise again. So as we reach a certain level, the market will kind of come in because it's ultimately an arm wrestle match between the bears and the bulls. And as you get to a too low of a level, which technically was 1250, you incentivize some people to be buying in the market. And yesterday was a relatively suppressed day, we're at the lowest level since 2022. So allowing some buying pressure, not just domestically but globally, makes a lot of sense. And as Bitcoin reaching to a $20,000 mark, this is a more of a, again, technical exercise. We form a golden cross, which allows for this cross section. Now we're heading up to the 53. So you can see that we're clearly getting blocked at the moment right now, 55 out of 70. So as we reach to ideally at 61, which technically translates into somewhere around like 21,500, you'll get some cancellations from there. And then on a weekly, you could see that we're still quite stale, right? We have this two heads, and we're about to form a third one, and then we're gonna get canceled out from here. So this is not, again, sustainable. And then on a monthly, you could see that we're plateauing, looking for some sort of a landing zone, which is good. So we do foresee some bullish pressure ahead, months out again, right? And then again, with respect to the daily, we should see some short-term volatility upward from here. More of a technical exercise because of the golden cross, right? And then across all the market, we're bouncing. Again, we're bouncing because it's a technical exercise, not because it's an organic macro shift. So don't be too surprised or too happy about this. This is something, that is part of the game, and these are things that you have to kind of watch out for and detect if this is real or this is not real. And I would say this is not real based on what we see so far. So appreciate you, and also thank you for the survey that you guys gave me yesterday. I do plan on establishing some sort of a private messenger or email / phone number that you could reach out to me. But I do have to think about how I would do that. If I give my phone number to thousands of people, I'm gonna be like a call center. So I do want to be selective. So I'll probably be thinking about some sort of a pricing structure. So but let me know how that goes. I appreciate you for joining me again, and hope you guys have a good rest of the week. And I'll see you on the next one. Take care.